early. Um,
Order submitted.
Welcome, welcome. Yeah, I got the mic on. It's interesting. Yeah, these markets are slow. Maybe I should have cut it on earlier, but we usually get success around this time. Uh, Markets are slow. You usually want to take sells, but this is just a test, I guess. See what's going on. I don't usually do runners, but it could be interesting. So I'm gonna do it for the show. Thanks for watching. Like and subscribe.
He's making a little bit to sometimes more than the loss limit on his up days, and he's doing it consistently. So, yeah, this is a good card. I think he's earned the right to hit that loss limit as long as he keeps it at the frequency he's doing now.
Yep. Yeah, it's the math always has to, it's relatively straightforward, those ratios and relationships, but it's got to come out somewhere, right? You have to have a reward to risk ratio, that marries to those winning percentages in a way that is profitable over a period of time. And again, we have 30 days to review, 30 trading days completed for this account. So we feel really comfortable that these numbers, although there will be some fluctuations over time, that's steady and something that we want to move to a live account and trade live capital for the prop firm. So shout out to you, Christopher. Doing great, and we can move on to our third and final card if you're ready, Jack.
Yes, give me 1 second. I'm doing a little bit of the one-man band back here right now. In fact, I gotta change that Chiron down there. Shoulder tap with Jack and
Like the guy from Mary Poppins who's playing 10 different instruments at once, using arms and
yeah.
legs.
There we go. So who's our last trading card? We got
We got Chanel.
Chanel. Chanel J.
LJ. Shout out to Chanel. I saw that she'd posted something, tagged us on Twitter as well. Really happy that she's getting called up to live. And I have to say, one of the more I don't know if unique is the right word, but kind of on the edges of that distribution as far as winning day percentage and a couple of other metrics. So excited to review these numbers with everybody. Average daily P&L $164. We're looking at 64 trading days completed. So Chanel has been in this account for a considerable amount of time, which is awesome. That means you can bank on these statistics a lot more than if we have fewer days, as we've been talking about all program. Most incredible about this, and this is what I mean by she's one of the outliers. She's taken $2,359 in payouts. That is across 10 payouts in this account. So when you've got
I noticed that. That's
91%
the first
winning
thing that
days,
jumped out.
yeah, you scroll to the bottom of that trade report and it sticks out like a sore thumb in a good way. 91% winning days is awesome. Kind of a more extreme version of the card we were just looking at, but ultimately that means when your average daily P&L is right around that $200 minimum that we just underneath that $200 minimum threshold we require to count a winning trading day towards qualifying for a payout. She is simply stacking up those 200-ish dollar winning days. Some days are considerably more, but generally she's kind of hitting the mark over and over again, hitting that threshold and requesting a payout. Now she's not requesting a significant amount, usually around $200 per payout. I'd love to see Chanel taking bigger chunks out, but ultimately I think that has benefited her because the losing days are considerably larger than the winning days. That's something really the only focal point that I think we can work on is getting away from taking that daily loss limit in an account this size of $2,000. We've hit that, I believe it's 3 or 4 times across the 64 trading days. So although it is very infrequent, it is truly, one step forward, 10 steps back when you've done that. So trading consistently and profitably, small amounts, and then having a big blowout day, in this case, the DLL, um, can set you back. But having that high winning day percentage has really, kind of kept her afloat over that period of time. And again, if she was taking significant payouts, up to 50% is what we allow, she probably would have lost this account with this type of trading behavior. So, as with any trader, room for improvement here, and that's kind of the location. I was going back through and looking at what the average, kind of the P&L high and low, what the trajectory looked like throughout the day based on that. And I think, just setting a limit of back to the personal daily loss limit. If Chanel were to just implement, hey, I'm going to set my PDLL to $1,000. I'm not going to give myself the $2,000 of room to draw down. I think that could really reduce the losses and ultimately increase profitability as a result, because very few days is she exceeding $1,000 in losses and then recovering to a point of profitability. Usually, once we hit that $1,000 in losses, it's kind of a tipping point, and you move further rather quickly down to $2,000 in losses and hitting the DLL. So that's one fix that could be relatively simple and straightforward, and could really increase profitability for Chanel. So I always want to try to give something actionable, something potentially useful that our traders can implement and increase their profitability relative to what we're seeing. But really cool stuff that we've seen from Chanel so far.
Yeah, she's also got way more than 30 days over $200. So I mean, if she wanted to move on, she could take it all out if she wanted to. But seems like she wants to stick around. But would love to see her take some more of that. But really crazy stuff. My one warning might be that 91% winning trades that's pretty tough to keep up. So maybe give yourself the cushion to be all right if it's not 91% or whatever. But who am I to say? I've never had 90% winning trading days.
Certainly not across 64 days completed. It's pretty fantastic. Chanel, you have as someone who looks at these hundreds of these accounts a week in depth, you really kind of jumped off the page in my estimation. So kudos just on that alone. And what I thought, Jack, when I was reviewing this is when you step back and kind of look at the big picture, this looks like someone who's treating this like a job. It looks like someone who's taking a paycheck from work done at a job that they take seriously. And I love that concept. I love the way that that's reflected in the statistics and in the data that we're looking at. So couldn't feel better about moving Chanel into a live account, and love that we're seeing this type of profitability from her. So keep up the good work, Chanel.
Awesome stuff. Well, that is our third card. Congrats to Chanel. Let me get back to see our pretty faces on here real quick. Ben, thanks so much for joining for shoulder tap today. Any final words you want to give the audience?
Lock up the profits while you have them is the number one thing. Don't let a green day go to red. I think that's horribly demoralizing. I've experienced it far too much myself. So if you're green in a day, like today, and when we have big news coming up later in the week, definitely lock it in. Nick, I heard Nick for a tick talking about going in and living his life using the other benefits that come with trading to he's taking care of his family and doing some fun stuff. So you don't have to trade all the time. If you're green, lock it up. If you're small red on the day, lock it up, and live to fight another day.
Lock it up, lock it out. Thank you, Ben. That is your shoulder tap for today. We're going to be back right after this break with group coaching featuring Dolby Time. and John Hoagland. You won't want to miss that. So stick around. We'll be back right after this.
Hello, everybody. Welcome to group coaching with the coach himself, Hogue. How you doing today? Are you ready for some tough questions from the chat?
Absolutely. The tougher, the better. I'm ready. How you doing, Dolby?
Fantastic. Doing great. Got to witness some excellent house account trading this morning, putting up some
good.
big bucks, up like 5,000 buckaroos, some really solid trading. Took advantage of that range and was decisive and got rewarded.
Always good to get rewarded.
That's what we're here for.
Right.
Oh, you do a little slide here.
Yeah, it's all right. We'll just. No, yeah, I'm just going to the charts for now. We'll just keep an eye on the markets and ready for the session. It's good to have you here, man. It's I don't get to go one-on-one with the Dolby time all that often. I'm excited.
I am too, Hogue. I am too. Known you for a long time. You've been a huge help to my trading. I've had many phone calls with you back in the day when I was a young buck. So I appreciate all your help, just as I assume chat also appreciates all your help. And also as Steven, aka Wheels BT, is about to appreciate your help. Our very first question here, actually, Wheels BT's in chat. You answered my question recently about how to learn from losing days as a beginning trader. I greatly appreciate that answer, and that I can ask questions of such veterans. So here's the follow-up question. As I'm trying to rebuild and reevaluate my strategies, what are reasonable goals? Should I aim for daily goals of X profit, or should I set weekly goals knowing that losing days happen even to the best traders?
Reasonable goals. First off, should I aim for daily goals of X profit? It's been my experience, Stephen, and I think a lot of traders experience that when we do put those like daily profit goals in front of us, sometimes it has the opposite effect. There was a period of time in the S&Ps when my goal was to make 40 ticks. That was $1,000. Okay. And, I'd get up 35, 36, 37 ticks. And even my clerk would say, all right, basically you're at your goal. Why don't we just go at least have some lunch, maybe come back later or just get out of here. And I'd say, nah, you know what? It's just a couple of ticks. Let me reach my goal. And then we'll just go for the day. And if that next trade is a loss, now you're chasing more money. And if the trade after that is a loss, then it's then you're chasing more money and more money. I've just to get those last few ticks to reach that target, that profit target for the day, I have ruined many good days. I mean, even to the point of hitting a daily loss limit. So I don't suggest doing that. And if you are, you're getting close to your daily profit, if you take that first loss and you start to get a little bit tilted, a little bit off center, then just call it a day. You know what? You've had a good day. You're working on new strategies. You're reevaluating your strategies. Having a profit target in front of you does sometimes have the opposite effect. Sometimes we actually create the outcome of the fear that we're afraid of, right? So when you're reevaluating your strategies, it should all be about sticking to your strategy. If you're reevaluating your strategy, if you've made a gentle change in the trajectory of a specific strategy or anything like that, your goal should be to trade that strategy. Don't think about profit. Don't think about, we always have to think about loss, but don't think about profit. Think about sticking to that strategy, because only if you stick to that strategy are you going to be able to tell over time if it is going to be a viable and profitable strategy for you, over a longer period of time. And, strategies are like market states. They change. If the market state is directional, if it's trending, that's one strategy. If it's range bound, that's another strategy. Setting weekly goals, knowing that losing days happen even to the best traders. Yeah, that's good. You have to accept that fact. And you might remember in some of past group coachings, the thing my dad said, I could double my income if I'd only work 3 days a week. The problem is I don't know what are the good 3 days of the week to trade. You're going to have days where you're going to be trading well and seeing the markets well. You're going to have days when you're not going to be trading well or seeing the markets well, recognizing those days early and saying, okay, this isn't my day, let's walk away, and accepting those as small losing days, that's a good thing. Setting your weekly goals, setting your daily goals, setting your monthly goals should be all about making good trading decisions. Money is a byproduct of making good trading decisions. When you can consistently make good trading decisions that are in your best interest, no matter what, you're going to be a lot more successful in remaining profitable and hopefully, finding great success in futures trading. So take a little bit of the pressure off reaching a specific target. Put the pressure on actually, maintaining and sticking to your strategy. That way, you're going to find out eventually if it's a viable strategy again that's going to work. Even the best strategy has losing trades. Even the best strategy has losing days. The best traders have winning days. The best traders have losing days. It's just part of the game. Great question, and I really appreciate it. And hopefully that is something that is going to help you. And thanks for the great questions you have been asking. Wheels BT, great.
Yeah, great start to the session with an excellent question. So this one's from Craig. Can you share some strategies on entering ORB trades? What's the best time frame? Is it ORB? ORB? What is that? Opening range balance? Is that what it's called?
Opening range breakout trades.
Breakout. Got it. I'll put that in chat. Feel free to answer that one.
Okay, so opening range breakout trades. There's a lot of different factors and time frames involved. I like to look at a 1 minute opening range. Thinking back to what the opening range is, it was back in the pit. If there were brokers that had orders in their hand that needed to be filled right on the open, that would establish the opening range. If it was really busy, the opening range may be 4 points and take 3 minutes to establish. If it was a quiet day, it may take 30 seconds and just a few ticks to establish the opening range. But it was never time bound or range bound. It was always pulled by the exchange to say, okay, we're thinking the opening range should be this, and they would ask each broker if they filled their orders inside that range. And once that was established, then the opening range went out to the public. But that was humans. If there's something that somebody wants to get done right away, right when the market technically in regular trading hours opens, you have a whole minute to do that. And by pushing the buttons, you can probably get a lot done in 1 minute. So that's why I look at 1 minute. I know there are others that look at 3 minute opening ranges. Coach Jay, for example, I think there are other people that came from the floor that look at 5 minute opening ranges. But the longer the time frame of the opening range, the more risk you're going to probably be establishing once you take that opening range breakout trade. Not always, but a lot of the times that is true. So the opening range trade is something that is streaky. I think a lot of people look at it, a lot of people try it, and the more people that try it, the less likely it is to succeed. Let's take a look at the S&Ps. So the opening range wouldn't have played out today. Well, we looked at this and said, well, the market's opening in range and in value, so we're probably not going to be looking to take the opening range. The opening on this platform, on these TPO charts, the opening range is the first minute, and it's represented by this gold bar right here. So we don't really need to know levels. We want to see how often the opening range actually plays out. Did it play out this way? Did it play out on Friday? Well, it looked below, but then the market continued to push to the upside. Did it work on Thursday? It did not work on Thursday. Did it work on Wednesday? No. Did it work on Tuesday of last week? Finally, yes, it does. The market opens. We never trade below the low of the opening range. And the risk on this would have been, let's call it 8 points. Well, by the end of the day, there was a considerable amount of potential profit in that. That's what makes the opening range trade so alluring, but you're going to have to be able to stay in that trade pretty much all day to reach the ultimate profit of that session. Does it work here? No. Does it work here? No. Does it work here? No. Does it work here? To a degree, the market was left at the opening range was left at the low of the initial balance. it did provide a pretty substantial amount of profit, but by the end of the day, the opening range had fallen and the opposite move happened. So when you look at this, and I can go back several days and sometimes even several weeks, and I can see that, over the last 10 sessions, we've had 2 opening range trades that actually held as the extreme of the session for the entire session. Now it's streaky because a lot of traders are going to be looking at the opening range trade. They're going to see it go, 7 out of 10 days. It's going to actually play out for us. And then they're all going to pile in on it. And the more that pile in on it, the less likely it is to happen. So it's streaky, and you have to be subjective with it, because when everybody gives up on it, that's when it starts to play again. It's humans, right? Here's another opening range trade that held as the low of the session. Look at the potential profit from that. But again, you don't see it that often. Here's one that almost plays out, and we could see some really good potential downside profit in that. So the opening range trade is something, Craig, is something that you have to look at and say, okay, if I'm trading the S&Ps, what's the biggest opening range that I can take? What's the biggest risk? Is it 10 points? If that's the case, then you're not going to be taking opening range breakout trades that are greater than an 8-point opening range, because you've got to give a couple of points on the other side of it, because sometimes the market will come and take out those stops that it just knows is there. But the idea, Craig, is to do it with consistency. If you're going to choose 1 minute, use 1 minute. If you're going to choose 3 minutes, use 3 minutes. If you're going to use 5 minutes, use 5 minutes. And be ready to take losses often with that opening range trade. But also think, if we do get an opening range trade that remains the extreme of the day, we don't know how far the market can take us and profit for us by the end of the session. So it's very difficult to try and stay in those trades. Some of those opening range trades end up being trend days that just trend that direction all day long. And it's a beautiful thing, but it is very hard to sit on your hands and just let the market continue to pay you. There's always pullbacks. There's always things happening. Somebody may say something like, wow, you've got 5-1 on that trade. You should probably just take it, because what if the market comes back and takes it away? Oh my goodness. They're coming to take it away. Oh my, oh my. But, opening range trades can be really profitable. Again, they can be low probability, but high profitability. So get your head wrapped around the idea that if you're going to be taking them every day, you may take a loss for 8 days in a row before you actually catch one that's going to continue to pay you throughout the day. Good question.
Do you even take a breath there, Hogue? Was that the first one?
I believe I did. Yes, I believe I did.
That's right. Hogue coming up for air after answering that one. Excellent answer. Like with all things in trading, make sure you are doing it consistently. Consistency is the key. This is from Chandu, not to get mixed up with Spandu Orchestra. Is that what it was, Hogue?
Spandau Ballet.
Yeah. Dude, they're awesome. Great song. But this one is from Chandu. I like to understand, how do you establish day bias, and do you always trade in the direction of bias by waiting for pullbacks or retracements to specific levels?
Bias. Biases can be fantastic if your bias is right. Day bias can also be detrimental, of course, if your bias is wrong. The idea is, if you start the day with a bias and your bias is right, timing, entry, execution is what it takes to get into a trade when you're right the bias, and hopefully you're able to do that. But when you come into a day with a bias and that bias proves wrong, where and how do you determine that bias is now wrong? So, Chandu, what I would like you to think about doing is, when you're doing your prep for the day, and you may have a bias one way or another, establish some hypotheses. Okay, if my bias is right, what does the market have to show me to continue to tell me that my bias is right. Have a hypothesis for how to address and execute in the market that is going with your bias. Also, then there, you may want to have 3 different hypotheses for if your bias is correct, but you also want to have 3 hypotheses for when your bias is wrong. When your bias is wrong, how are you going to know unless you kind of plan for it? And when I say no, everything we do is a hypothesis here. We never know 100% if something is right or wrong in trading. We have to work the probabilities, and if the probabilities go in our favor, we're going to make money on that trade. If the probabilities go against us, we have to know when to get out. So um are there biases that we can pretty much, I mean, you can't really count on anything, but if the market's been trending to the upside and there's no break in that trend, well, we should probably be looking for opportunities to buy weakness or buy pullbacks in that market until that trend proves to be wrong. Easier said than done, of course. But instead of using the word bias, think hypothesis. In gold, for the past 2 sessions, 3 sessions, I've said I have a hypothesis that gold is going to be going significantly higher. I base that hypothesis on data that I collect. So if I'm right and the hypothesis proves right, how do I trade that? How do I get into those trades? Well, if the hypothesis is that gold is going to be moving significantly higher, I don't want to buy the high. I want to buy it when it pulls back, when it actually looks weak. And if I can buy it when it looks weak and it holds that level and continues to push to the upside, then my hypothesis or bias is proving to be right. Is there specific levels? Of course. I mean, everybody has setups on the charts that they're looking at, whether they're 5-minute or 30-minute or 4-hour or daily charts. Those are the levels where you want to try and look for your opportunities to get into these trades, because those levels possibly will, save you money if that trade doesn't work out. So you can't, if your bias is to the long side and it's proving right, you still don't want to just point, click, and pray. You want to be smart. Okay, so the market is proving, it's showing me that it is attempting to move higher and it's doing a good job of it. Maybe I look for an average pullback. Maybe I look for a low volume node to trade against, to maybe see if I can get in that continuation or that trending move to the upside. There's a million ways to, I don't want to say that. I'm just going to say it. There's a million ways to skin a cat.
Well,
You got to
that's
figure out
just
what works for you. But bias, think of it more as hypothesis, because hypothesis can be proven wrong because it's just a hypothesis. Bias, I think, gets taken much more personal. If I have a bias and something proves my bias wrong, then I can say, there's no way I can be wrong. But if it's a hypothesis, which is an educated guess, well, I think it's a lot easier to accept that a hypothesis that you have has been proven wrong, and you can then change to the next hypothesis that might be at that time proving to be right, and maybe you can get in the market in the right way that way. I think that's a good yes. China, I like that. A million ways to peel an onion. There you go.
Yeah, there we go. Dice them up like Hogue is dicing up these questions right now. This one from Gabriel. How much time do you consider good to call to see if a strategy works or not?
Interesting question. If, Gabriel, you are working a specific strategy and that strategy is in line with current market state, okay, so if you have a good strategy that works in balancing markets, that good strategy is probably not going to work in directional markets. So when you have a good strategy and it's not working, it may not be the strategy. It may be that the market state has changed. And it takes human beings time to get their head wrapped around the fact that the market state may be changing. It may not be their strategy at all. It may be just something about the strategy that's not aligning with the current market state. Again, back to the simple explanation of balancing or range-bound markets to directional markets. In a range-bound market, they're just kind of rotate from a high to a low to a high to a low to a high to a low. You see this with Dolby's range-bound strategies every time he's on. He's saying this is okay. There's a 5-minute range. The way to play it is fade the high, fade the low, sell the high, buy the low, sell the high, buy the low until it proves to be wrong. If that strategy is working in a range-bound market, fantastic. You can print money that way. But the moment the market state changes to potentially a directional move, you're no longer looking to sell highs. You're looking to, let's say the direction is to the upside. We've started a new upside trend. That strategy has to change to I'm buying pullbacks and letting the market run a little bit further because we've got a directional market. So consider it, it's Gabriel. It's almost like there is no automated strategy that is going to work forever and ever in any kind of market state. Even automated strategies, algos, they have different strategies for different types of market states. So it reasons to say that we should have different type of strategies for different market states as well. So the goal number 1, establish the market state. Goal number 2, hypothesize where the extremes of that market state or whether it's going to be a directional market state. Number 3, apply the proper strategy. So it may not be a strategy that's not working well. It may be the market state that has changed. And again, it's difficult for humans to change that way. Usually we get a whole bunch of our gears stripped before we say, oh, now I get it. We've been driving higher for 3 months. Now we're moving lower. I get it now. Maybe I should start looking for offers. Maybe I should start looking for places to sell this market. It just takes time. And a lot of people do strip their gears and lose a lot of money before they kind of recognize, okay, it's not the strategy, it's the market state that changed. Whew, yeah. At least I know the strategy is still going to be good when that strategy comes back into play.
Yeah, if trading is hard, it's probably because you're just on the wrong side of the market. It's probably nothing to do with your trading system. It's either really hard or really easy, depending if you got that trend down. Let's see. Yep. This one is from Alex. When a double distribution day forms early in the day, ES for example, is it fair to expect that area to fill in during the day, or is it more a sign that value is moving up?
Good question. Good question. So you could say that the profile today in the S&Ps is a double distribution trend day. I mean, we did spend an hour and a half inside the initial balance. We drove above the initial balance, like leaving single TPOs, and we're kind of holding in an upper balance here. So technically, yeah, this could be a double distribution trend day to the upside, and we've gotten more than 4 wide in the upper distribution. So if we were only 4 wide in the upper distribution and continuing to drive to the upside, we could call this a trend day. Right now, it's a double distribution trend day to the upside. If we continue to push to the upside, then it turns back into a trend day. However, do we look for the market to come back and fill this in today? If we do, we come all the way back down and fill these single TPOs and come back into the lower distribution, it indicates that something has changed. For whatever reason, the continuation move to the upside is now fallen into range or balance. So that's why when we leave the initial balance and we can't get back inside the initial balance, that creates a support level, and we're looking for the market to continue the move to the upside, which, by and large, that's exactly what has happened today. But if we do come and take these out, it doesn't mean that the rally's over. But if we do spend some time inside the initial balance, it could indicate possible change. Am I expecting that to happen today? I am not. We've got 56.12 is weekly kickoff high. We've been pushing higher all day. We've had a lot of negative delta up near the highs. I think that we're still continuing to see shorts getting squeezed and continuing this move to the upside. nobody knows what is going to happen, Alex. But if we do fill in a double distribution date in the regular trading hour session, then something has changed and the market is more likely to kind of return to balance. Or if something really happens, then maybe we see it to head out the other direction. But, a double distribution trend day, filling it in during the regular trading hours just leads us into balance. So if that happens, and I don't see it happening, look, we're right at the highs here. We've had a lot of negative delta up against the highs. Finally, we're seeing some positive deltas. So we've been squeezing shorts to the upside here all day long. Let's see what happens at weekly kickoff high, 56.12. We don't know. But it's going to be interesting no matter what.
As it always is, markets always have a little surprise to show us throughout the trading session. But Hope, we're going to wrap it up. We're going to move on to our next segment, which actually is just this segment plus one. Anne-Marie is going to be joining us for Strategy Lab with Anne-Marie. I don't know what we're going to talk about. Maybe we'll talk about ranges. We had Andrew Ray's actually ask a question at the very, very end. How do you find the correct range? I feel like I always put my ranges wrong. Well, I certainly love talking about ranges. Oh, yeah, go ahead, Hope.
One thing I know we're going to talk about is contracts, because I'm going to try and steal Anne-Marie's contract to get her on Hoag's Heroes.
Nope. She is a member of Team Higher Highs. Actually, the next segment is with Team Higher Highs for Strategy Lab. Hoag, maybe your team can learn a thing or two. So let's move on to the next segment. We'll be back in a couple minutes, everybody, with Anne-Marie for Strategy Lab.
All right, welcome to Strategy Lab with Anne Marie. I'm John Hoagland. In the middle is the wonderful and excellent trader Anne Marie Band, and on the other side is the guy who stole her from me, Nick Gold.
Correct. That is correct.
I looked
Hey,
away.
listen, I
and she
can't
was
help it.
gone.
I'm a wallflower. I
We
was
trade
just
similar.
waiting in the background.
I knew. I knew you were there, Anne Marie.
We'll talk contracts later. We've got a great session for you today. Anne Marie has done a little bit more research into her fib and settlement study that she's got, and we're going to take a look at some of maybe some of the areas and some of the trades that were taken on the house account today, and we're looking forward to seeing what's going on here. We've got right now the S&P is traded right up to weekly kickoff high 5612, which lines up with one of Anne Marie's levels that she's been looking at on all of this. So Anne Marie, I'm going to let you take it for now here and share your charts and talk about this level up here. And yes, it is twice the initial balance.
Yeah, so the premise here that we have is that there could be, in the near term, some algorithms that are sort of running the show here, and they are pushing us up into particular familiar areas, and they're related to the initial balance. And so when that initial balance sits around settlement, then all kinds of other things can come up. So I'm in the midst of taking a look at seeing if the initial balance can somehow give us some predictive measures as to where our targets might be. And so I've asked Andre from Edgeful, I know he's going to be on this week sometime, but I've asked Andre from Edgeful to say, hey, listen, can you grind some data up for me to see what percentages of the time we accelerate into these different fib targets. Now, today, as it sits, we really happen to be sitting right at the 2.0 fib, which is John's weekly kickoff high, which is 5612 and some change. And that 2, I don't know if you can see it because I have my fibs kind of quiet in there, but the 2 is right about 5610. So what I would anticipate if we don't have further upside is that we start to top and give topping formations around this area. Else, we easily could move up into 5622. So the question is then, how do I know what to do here in this particular formation? Well, the first thing that you really don't want to do is immediately short that level. You could, if you were thinking to yourself, listen, this would be a cheap short, but by and large, you want the chart to begin to show a topping formation. And so one of the topping formations that most of us should be familiar with is Coach Dakota's 3-candle reversal.
3-bar reversal, yeah.
3-bar reversal, yes, where you take a look at 3 candlesticks, and the one that closes underneath your breakaway candlestick signals that that might be engaged. I look at that all the time, but in the end, the big thing to look at is you got to use your eyeballs and go, wait a second, if I draw a line and it points straight up and to the right, I have to think that if I'm shorting, I need to be quick or I'm going to be dead. And if I have a short that is engaged, it is going to break my moving average like it did down here, but not recapture my prior highs. And you can see in that formation right over here. I wish I could make my cursor just a little bit brighter, but right over here to the left of our ES, we can see that it did break the moving average, but it immediately recaptured it and continued to the upside. So what you have to have is a fair bit of patience. Now, if we could look at, we've got 20 minutes until the next TPO profile
30-minute bar,
thing.
right?
Thank you. What would it need to look like for us to have a failed upside auction in this formation, or is the best we can hope for an auction fade?
Well, we've already got a double distribution day to the upside by and large, kind of a double distribution / trend day. So it would be more of an auction fade. What we're looking for with weekly kickoff high is we're looking for longer time frame traders to start thinking about or actively adjust inventory, from that level. Now, if it becomes magnetic, sometimes it takes some time for that decision to happen, for that decision to be made. But sometimes not. Now we're starting to see it pull off of that 56.12 level. We have a bearish piercing pattern on the 5-minute chart. We have, we don't have anything yet on a 30-minute chart, which would really kind of give us the idea that, if we have a bearish piercing pattern or a bearish engulfing pattern, then I would look to say, okay, we may have seen that level, as a high for a period of time. That would be something that would suggest that we did see some longer time frame traders adjusting inventory there. It could, and it could actually end up being just as simple as some longs taking some profits at that level.
Yeah, for sure.
So a lot of it has to do with volume and the amount of rejection from that level. We're not seeing huge rejection from that level here just yet. So yeah, it's just an interesting level. What is this 12 here? This is,
the key takeaway for everyone is, listen, you might see it as a top, but you have to assume it's just a fade into support at the first pass because the momentum is so bullish. It really, really, really is very important. It feels great to be the hero and catch the top, or be the hero and catch the bottom, but it's a rarity. And so it's much better to allow the formation to develop so that the probability of your trade is going to be even better. Now, the beauty of this particular event unfurling before us is that this is still this expansion of Fibonacci from our morning formation, and part of the theory, I'm thinking that a number of algorithms in recent months have come back and said, hey, let's use this initial balance as a range for how far we might break up and to the right or break down and to the right. And so I'm seeing it fairly well. Something else that makes me think it's a number people are looking at is that it came into the 1618, and this is a 5-minute chart, but literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles touched that 1.618. And so I find that to be fairly interesting. Over to the right, I have the V contract for oil. And if anyone was watching the conversation between me and Dolby, he was saying, wow, oil is pulling off. And I said, yeah, but I think it ought to come into that 73.35-ish area. And really, that region was right around here where it started lifting. And all I did was look at the opening range volume, the opening range candlesticks. And here's the interesting thing. I used the 930 open, not the open of oil. I used where the volume spiked, and I did that measure. And so what I'm trying to figure out if the open in the commodity cycle matters as much as 930 open, where more of the participants become engaged. So I'm looking for the first volume spike.
8:30 Central, right? 8:30 Central,
Yes.
9:30 Eastern. So technically, you're looking at it with
It's been open for an hour.
actually open for half an hour, right?
Yeah. And so, but what I'm noticing is that the volume lifts, but it's not significant. And so my thought process is, all right, I'm going to dig around a little bit more and see if we can find some better target areas to focus. And again, I hate to sound like a broken record, but I know this happens because it happens to me. If you're busy doing measured moves and you see something and it's in trend, like oil is, like the ES is, like the NQ is today, and you decide you're going to take a position in the opposite direction, you must be very sensitive to price action change, because that in itself is going to save you from really being on the wrong side of the trade for a long time. You either do it because it's a cheap trade and it works immediately, but you don't do it and hang on and get, Zambonied, as it were.
Is that in the glossary? Zambonied? I think that's cool.
Zambonied?
It is now.
I don't know. It should be.
It is not. Woozy Woos is the last entry, so we still need one for Z. Maybe we'll add Zambonis into there, or getting Zambonied.
Steamrolled or Zambonied.
Yeah. We can use those as likely talk. Coach J says that volume spike makes a big difference. I have come to see that. The measuring at the open, I mean, there's some things you can look at, but nothing that makes me go, okay, I'm just going to hang on a minute more until this holds into that next space. It just, it doesn't feel as easy to use in terms of, all right, here's my target, here's what I want to hold for getting into a target versus here's where I want to put on a reversal trade.
And if someone at home wants to play along with you in doing these initial balance range extensions, would you be able to kind of maybe open up like one chart and then kind of go through how you define the initial balance and then how you apply the fib indicator in Topstep X?
Perfect. That's fantastic. Yes, absolutely. Mm-hmm. So have a look here. I will delete all my drawings.
Did you say drawings?
I did say drawings.
Drawings.
Which I love, because I'm always making. Do you remember that character that Mike Myers played on Saturday Night Live called Simon? Would you like to come upstairs and see my drawings?
I like to do drawings.
So I've been saying that for 30 years. All right, so a couple of things that you can do. First of all, get to the easiest one, the 930 candlestick formation. And here's the funny thing. These Fibonacci's work from the prior day's 930 to 1030 moves to the current day's 930 to 1030. And let me show you what I mean by that. This I find to be fantastic. So let me make the trend lines a little bit thicker so we can see what's going on. All right, this is Friday's 930 to 10:30 range. Let me make doubly sure. 9:30 to 10:30.
Eastern time, right?
I'm gonna move.
Eastern?
Yes, sir. Yes, Eastern time.
Okay.
All right. So here it was for Friday. So what do? I must wait until my 10 o'clock candle on the 30-minute is done. I must wait for that to be over. Only then can I draw the low to high. So what I will do, I'm going to remove this so that you can see how, remove drawings. Okay, so you can see how I do it. I go to my Fibonacci and I look for the high, which is the 10:30, and then the low, which happens to be the 9:30 open, right? Now, a lot of things we can take away from that. If our initial balance low stays the low, we know we've got upside drift. That's very, very likely. And when it comes back, look at how it hits that 38.2. It makes the range, comes right back in, hits 38.2, and then it accelerates to 61.8 and stays there, as that stays the high until the close, until the open of Sunday. And notice this, even Sunday night's formations hold this 1.618, right? We could add 1.882. No, it's 1.887. Yes, 1.887. We could hold that and look at that. Almost to the tick, it pulls in there, and then we can look and use like tonight, we would still use today's measurements to look at potentially where the price action might go and then begin to stall out. So that's the one. So that was Fridays that we could have used for Sunday night. And now
you're
today,
still using extensions from Friday's range through today.
Yes, you could. You could. So here is the new one until 9:30 to 10:30 comes up, and then you can put your new ones on, right? So the 10 o'clock candle carries both the high and the low. And so I really only care to measure this candle here, right?
How come your fib has so many more colors than mine does? It's like a double fib.
She said it that way.
So there we can see we came right up into the twos, broke it. I will look to see, all right, what kinds of levels do we have matching over here? And if we can look at the 30-minute chart, we potentially could have some sort of topping tail sitting right there, right? If it closes under there and then opens up, we could take a short with the risk being, just a couple of ticks above that. But as it sits, it's still saying, listen, buy the dip. You want to buy the dip?
Long.
Why? Yes, exactly. Look at our 30-minute moving average. This moving average that I have.
What is that moving average?
Yes, that moving average is very tight, and I can't for the life of me remember what it is. I think it's a 5. And so if that 5 is straight up, see, for me, I'm a chronic top and bottom.
Strong trend.
And so to keep myself out of that, I say to myself, I have several names that I won't say out loud that I call myself on occasion, and I'll go, what slope is that 5? Don't you dare take a short. Because if you do, you're going to get punched in the face. And so that
Zamboni.
is exactly. And so here, because I have my 2, I could say, if I had a runner, that would be where I would say, I've had this a long time. It's up at the 2s. It could easily take a breath until 2:45 or so, maybe 3 o'clock. and then I could get back in and head up the rails. But that's exactly how you would do it. I like to keep that tight moving average there that tells me just don't do anything dumb. And if you've got a 30-minute, and you move to a 5-minute and you see I'm still walking upside. If that confuses you, use a trend line and just connect the bottoms. If they're going straight up, you don't have any business being in a short unless you're deeply interested in scalping for, a couple pennies.
Yeah. See money, take money.
Yeah, exactly. Exactly.
Yeah, I was going to ask, and you might have even answered this question already. It's like, how do you avoid counter trend trading while you have so many levels above price? Isn't it like tempting to want to hit the sell button every time you see a fib level? Right? If we're hitting uptrends, they're all going to get hit.
That is such a good question. So here's what I normally have sitting here. Now, this is a standard fib, so I have not adjusted it per se because I'll draw these on my other platforms that I have. I do not normally have, no, I do keep that one because I want to see if it breaks down. I don't normally have that. I don't normally have that. I don't normally have that or that. So literally what I'll have is 1.618, 2, 2.382, 2.618, and then 3.618. So those are the only levels I know. And so what I've known is, number one, I know from Hogue, listen, if we break out of the initial balance range and we pull back and we don't re-enter the initial balance, we've got more upside. And that's really one of the things he was talking about that coincided with that test of that anchored view from the high that gave us all that upside trajectory that we could have had, right? And there was a good trade on. Michael put a trade on. I think he bought it at 635 or so. I had been short from up at the top in the NQ. And that 635 came into target. And where I got out, he got back in. And a good runner would have been great. I think he just held it for, 20, 30 points or something like that. I can't remember what. But that clearly was a great trade to lift off of. So in general, you're totally right. Having a lot of the position on there is not ideal. Now, you might look at this and go, wait a second, that's not the initial balance. It is the initial balance, but I have it marked from settlement. And so here's the other thing I noticed. If I get out away from settlement and I'm more than, say, 20% of the range or 25%, sometimes I use a GAN box. Let me show you this. If I use a
question
GAN
in chat
box,
about GAN, actually.
Yeah, so let me show you the GAN box.
Let me see who it was.
My favorites have disappeared to.
Hamad. Hamad
NASDAQ new
Qureshi.
highs. S&P's putting up new highs now.
Crazy. All right, so here's the GAN box. And let's let's go to the 30-minute candlestick formation. And then let's do the GAN box. Okay, and this is
NVIDIA's
again.
80 cents off of 130.
Oh my goodness. Wow.
That would explain
That's
the NASDAQ.
insane.
Yeah, it is.
Yeah, it's insane. Truly insane. All right. Yeah. Style. I don't want these boxes to be, I don't want these lines to be really big, but they are anyway. One more thing. Sorry. no time levels. I do not care about time. Right here, we're just looking at this price action. So notice, I can do a couple of things. I can take this move, I've already got it pre-measured, and I can say, all right, how far away do I get from settlement? So here's what I notice. If my range, let's say my range is 4 to make it easy. If 25% of my range, if I can't get within 25% of my range back to settlement, it has a tendency to continue forward. And so that's also something that I'm noticing and saying, wow, you know, I probably ought to pay attention to that. It gives me a sense of when settlement stops being a magnet. When settlement stops being a magnet, I find that to be quite interesting as well. And so right now, you can see we're well off the 2s. And then if I do it one more time, you know, it'll be 1.25 off of that motion. But I prefer to use the Fibonacci's simply because they are, they're easier to see where things are going. And here's the beautiful thing. You can click on your settings here. And when you go to the settings, let's say you think price action is going to go up, but instead it turns around and goes down. All you have to do is hit reverse, and it changes the direction and pulls right back down. And so
nice.
you can see, here's my initial balance. It comes back in, never touches settlement again. Another reason where you go, wait a second, that's a higher low. I had all my moving averages sitting there. So I was glad to move out at 635 because that long action, I mean, it is absolutely in complete continuation. So let's see where the next level is. And this is a perfect example of why you don't want to just come in and say, hey, I'm going to short simply because I've come into that zone. It's just, it's not the way the game is meant to be played in terms of having those levels. If that makes sense. Hopefully it does.
Do you see kind of opposing nuances in what you're doing here? Like, you know, like Dolby said, you know, there's a lot of levels. I mean, there's a lot of things to target, a lot of ways to kind of get yourself out of a long in that type of situation and start looking for opposite moves. You know, I find that there's always nuances that are telling you one thing, and there's nuances that are saying another thing. How are the nuances? I mean, I can think I can kind of see it, but is this correct in seeing that trend, that trend line, that very short time frame moving average is enough nuance to say I'm not going to be looking for any shorts here?
Exactly. And listen, here's the wonderful thing about trading. Sometimes the most simple, straightforward thing you see is the very best thing that you can do. And really, before every trade, you should ask yourself, am I moving in trend or against trend? And the moment you say against trend, say to yourself, I am sitting in front of a steamroller. Do I want to take this trade? And just make sure that the things that you say to yourself are the things that matter in terms of taking execution. It matters if you go, is this trend? Is this counter trend?
Order canceled.
It matters. Why? Because trending trade, I know there are a lot of people that go, trend is not something to follow. Well, whatever, dude. You do you. I'll do me. All the CTAs come out and say things like, you know, trend following isn't, it's all, they talk about mean reversion and all kinds of fancy things. And I'm like, you do you. Okay. Whatever works for you, just don't don't step in my playground with that,
Oh.
because if you don't think about trend, you're going to get shredded. Now, here's the thing.
One
Early
thing for
in the
sure,
day,
you don't want to fight trend. It's difficult to get
exactly,
in. You don't want to fight it.
exactly. So let's say you were looking at this on a 5-minute and you said to yourself, whoa, could I trade there? This, I think, is one of the prettiest Dolby trade setups that we can
higher
have
highs.
during the course of a day, right? It's just absolute noise. And you can see that 5-minute range, which is bounded by the 1.618, fortunately, it's telling me, listen, as long as I reject that, I'm very likely to come back in and test a top of
Order
my initial
submitted.
balance high. And so I'm going to change the color, make it a little bit brighter
Order canceled.
so that I can see it. And if I come in and I don't test it, it means that all the buyers have said, yeah, I'm not waiting for that to come back. I'm getting in. And that in itself says, all
Order
right, I
submitted.
can take that sort of trade. But the moment it starts trending, and I have a series of candlesticks that are not really retracing each other, and I'm moving up into a range, I can see, listen, if I've got this area that holds and then bounces hard at my prior support, and I'm looking
Order
at upside
submitted.
trend, I'm going to break through. Listen, if you're ever in a range and you see you see higher lows, you know it's going to pierce your upward bound. And I know you can't see that very well from my chart, but it's definitely the case. It might not pierce it and stay, but it's going to pierce it. And so you've got to be super careful. These higher lows tell us what's happening. Now, when we look at a dome, we can see price action way at the top. We go, oh, people are waiting up there. And sometimes the notion is prices tend towards where all this heavy volume is sitting. But the fact of the matter is the buying pressure comes from underneath. It does not come from above. The only thing we can do above is sell. The only thing we can do below, if we're trying to move prices, buy, right? And so these higher lows push us up into those ranges. And so always think to yourself, okay, what are my candlesticks doing? Are they making higher lows? Don't short. We've all come in and seen things like this. What are my candlesticks doing? Making higher lows. Okay, don't short. And then the floor falls out from them, just like this formation says. And so our brain goes, oh, well, I can do that. But see, just 20 minutes later, the whole thing reverses and moves up into the next space. So what you have to think about is, listen, higher lows tend to higher highs. Eventually, if I keep making a series of higher lows, I am going to end up making higher highs unless my price action collapses into another higher low on a bigger time frame. And that's exactly what happened here. It was a higher low just on a bigger time frame. And if we looked at our 30-minute chart, literally it didn't even give us any sign except, just it's going to move sideways into that moving average. And if it moves sideways by time and not price, you've got more upside pressure on the horizon.
Do you think for some of the newer traders, they maybe get caught in the wash a little bit because they think the market is going to respond to a fib level? For example, it's like, oh, I have to take a short here. We're up against the 61%. This is why the market is doing what it's doing, is because I have something on my chart saying that's what it's doing because it got to that level, versus the market's just going to do whatever it wants no matter what.
That's true what you're saying. we do have a tendency, once a line gets drawn in the sand, we go, oh, that must be where we're going, or
Gotta
that
do
must be
something
where we should stop. Exactly. And the number one thing to get out of our heads is that specifically. We have to get to the space where we say, wait a second, that's not what that line means. What that line means is this is a potential place of interest. Every line that John puts up for us in our
Okay,
top
so
step
I
indicators,
gotta
which I have
show
here
this.
on my chart.
So I'm gonna show you the levels predicted by custom GPT4o. So you'll see what I'm talking about. Custom GPT4o. So you'll see what I'm talking about. Custom GPT. So right here, 5625 is coming up, so it's not too far away. 5615, we just passed it. Coming up, it's not too far away. So I'm not just making this stuff up. It's right here. So I'm not just making this stuff up. It's right here. And like I said earlier, it's said to basically, like I said earlier, it's said to, if you're already holding a long position, you might consider taking some profits. So potentially, you're supposed to take profits when the price moves higher. So potentially, you're supposed to take profits when the price moves higher. Excuse me. I'm not sure what hit 5630 today, but I'm still gonna watch it. Sure what hit 5630 today, but I'm still gonna watch it. So there you go. Sure what hit 5630 today, but I'm still gonna watch it. So there you go. What?
North, south, whatever. It's not north, northwest. I'm just north, south, east, west. Am I moving up? Am I moving down? Or am I moving sideways? And that's all that I will look at. And that keeps me from sizing up on the wrong side of a position. Doesn't mean that I don't try to catch the tops. I do. But I've come to learn that if I'm wrong, I gotta be wrong fast and I gotta be wrong small. And so I will always trade counter trend with smaller size.
More of a see profit, take profit sort of situation if you're going to counter trend trade.
And get out when you can, not when you have to.
Okay,
Yes,
I just read Deanna's dog perfume has shipped. I missed this story.
What?
Deanna's dog perfume has shipped.
Isn't someone in production?
Oh, yeah.
I
yes,
I
it
missed
was.
that one. I'm going to have to dig up and find out what that's about.
Looking forward to the story,
Yes,
though.
I know. So I think, hopefully this is useful to us when we're trying to mechanize our trading. And a lot of the trading we do is discretionary, but it still needs to be mechanical, or else we have no ability to replicate it, right? It's like the pitcher. If he doesn't have a specific windup, if he doesn't hold the ball a certain way, he's not going to get, he's not going to get the results that he wants. If he's got his chest open too wide, if he's got, whatever it is, you've just got to be very mechanical and not be afraid of missing out on trades. And that just means slow down.
Consistent reasoning and decision making.
Yeah, and isn't that, I got to tell you, consistent reasoning is hard.
Yeah,
consistent reasoning is very, very hard.
You start getting biases, and that shades your reasoning.
Absolutely, absolutely. I mean,
Takes us
bias
one
is
big winning trade.
killer. What's that?
Said one big winning trade is sometimes all it takes to really change someone's mindset on the markets. It's like, oh, I made all this money going long, and then if the market all of a sudden shifts to shorts, then it can get pretty stubborn, flipping sides if you made all your money on the long side.
I knew a lot of guys in the Nasdaq pit during the tech bubble. They learned how to buy it. All they had to do was wait for a break and buy it, and it just kept going up. And once that changed,
if it closes on its high, buy it.
Yeah,
fast trade of the day. I talked to so many guys like that when I first started trading. I was like, what? No, really, it works. Trust me. Of course, it didn't, because I started trading in the 2005 era, which everything started collapsing just sideways to down during that fun time.
Those same guys that made a lot of money on the upside never figured out how to get short. They lost a lot of money on the downside.
Yeah. And here we are up at the 2618, and again, it doesn't, to the point that both Dobie and Hogue were saying, just because you see it doesn't mean, hey, this is a place to go short, but it is a place to go, you know what, if I'm long and I have size to trim, it's a good place to trim. Other than that, I'm just going to hang on and raise my stop because I'm well into profit zone. Even if you bought it off of the touch of the last simple moving average touch, you'd be up, 40 points already.
Well, we talk a lot about, all of these levels, or any level is just a level. It's an inflection where there may be some sort of an opportunity. It doesn't mean that there is going to be an opportunity. I mean, even the weekly kickoff levels, you could look at those as resistance or support when they're there, because we're looking for longer time frame traders to adjust inventory there. And in the S&Ps with 5612, it's stuck there. It's stuck there. And then you saw when it popped, it looked like there was a big decision that got made. And they said, you know what?
Everybody turned around. Yep.
Everybody turned around and went the other direction. And if that's longer time frame, there's more movement to the upside in the S&Ps. And that's what those levels are. I mean, they're not, I put those levels out. We put those levels out just for reference, for, potential opportunity. We don't say which direction those opportunities might be. You get to your 618 in your fib, and that may be an opportunity for you to maybe lighten up or, get rid of some of your inventory, but it's not saying go short here. It's saying this is an important level. There may be an action you need to take. Pay attention. That's all these levels are, is pay attention.
Yeah. When I was doing trading combines, my simplified kind of like OODA loop was level time trade. Are we at a level that we like? Are we spending time there? And if we are, there might be a trade opportunity. Those are like the three things that I would try to simplify it down to, because if we get to a level and we blow right through it, it's not really a good trade attempt.
Exactly.
I always forget about OODA loop.
The OODA loop.
Yeah.
OODA loop.
Yeah.
What is it? Observe, orient, decide,
Decide
act.
Decide and act. Yep. Yep. Yep.
Observe,
Nasdaq
orient,
just
decide.
took off here. Nice little run here in the
Yeah, we
Nasdaq.
just saw
They went to
that.
ES.
It's insane.
Yeah, 780s. And Q and even the ES all the way up to 5620. I mean,
The rally
so
continues.
bullish.
Rally continues. And that's, you know,
Sure.
this is what happens when we see, you know, initial balance extension that just continues to kind of push higher. I mean, we never did go back and retest the initial balance high in the Nasdaq, in the S&P. We never did go back. Yeah, I guess we did test inside the initial balance on the Nasdaq, but we didn't get very far into it before the buyers really started to take control.
Yep.
This is really becoming a relatively emotional move to the upside. If you
Yep.
if you follow
And
Dalton at all,
again, I think it's driven by shorts getting out of the market. Right?
Probably.
So speaking of which, what does the delta look like for our power hour friends?
well, the S&P was holding some pretty negative delta, you know, all the way for the better part of this move to the upside, which you would be right in saying this is short squeeze. But right now it's positive 4,900 in the S&Ps,
Gotcha.
positive 5,400 in the Nasdaq, and once again, gold closed at 1230 with a negative delta. That's something we've been watching, something we've been talking about. There may be even some more legs to the upside in gold. We'll see what the open interest did tomorrow morning in that, but I have a feeling we're still seeing some pretty good buying coming into that market, and if that is the case, it's likely to continue.
Very interesting.
So, like, we got a little bit of time left. I know we're talking about like counter trend trades, trend trading. So, in the ES, for example, this level here, 5621 and a half. So, that is the low of the range we had in July. So, if you go from like, this is the ES, so let's say July 9th to about the 17th, we have a daily range. I have 5622.50 as about the low of that range, and so now we're actually kind of coming up to it. On a short time frame, I probably could actually justify a short on the daily level if things set up properly for those conditions. So just
talk about what the setup would look like. What time frame would you go to, and where would you manage your risk?
Yeah, so the setup is actually on the daily. So this is a daily chart in the ES right now. The range I'm referring to is going to be everything within this box with the red border right here. Right, so that was midsummer, right, middle of July, and that was the range.
Order canceled. Order canceled. Order filled.